Time for the word on Wall Street. Top investors watching your money. Joining me now, Kathryn Rooney Vera, Bulltick Capital Markets Chief Strategist, Rebecca Walzer, Walzer Wealth Management President, and Michael Lee, Strategy Founder. Kathryn, let's start with you. Futures are selling off this morning following Friday's reading on consumer prices, but heavy selling Friday. Terrible week for stocks. Inflation, the CPI, up 8.6% in May. That is a new 40-year high, the highest since December 1981. And I was mentioning the 2-year and the 10-year yields inverted earlier this morning for the first time since April. How do you see these markets? Watching the Federal Reserve meeting this week, what are you watching? What are you expecting?
It's clearly not going to end pretty, Dagan. I think the Fed has to choose at this point between inflation and recession. The Fed has to hike aggressively because it went long in the tooth in its ultra-accommodative policy. Remember, Dagan, and the audience, you remember this too, as late, let's say, as March of this year, the Fed was still buying bonds. Buying bonds means that they're injecting liquidity into the system. Over the past year, the Fed has said inflation is temporary, the labor market needs additional support, and there is no wage price spiral. Wrong on all three counts. Went way past the expiration date on expansionary policy and now has to play enormous catch up. The problem now, however, is that we have an economic deceleration. We're in stagflation. That's my view. Stagflation being defined as high inflation and growth below potential. I think we're there. And now the Fed either, tackles inflation, tries to claw back some credibility. The problem here, I'll add, is that even if the Fed were to hike 200 basis points, 300, whatever they want to hike, Dagan, they don't control the entirety of the CPI basket. They control a fraction of it. So inflation is here to stay. It's sticky. It's long-term in nature, and we're heading into a recession. The determinant of when we enter recession is the labor market. How quickly does it roll over? So what I'm watching for is the unemployment rate. Does that shoot up? And if that shoots up, then we should be expecting a recession imminently.
I'll just add this before I move on to Mike, that Kyle Bass, a frequent guest on this program, he's talking about quantitative tightening or the reduction in the Federal Reserve's balance sheet. That is just beginning. This is on Twitter. After almost $30 trillion of global stock losses, the Fed is about to start pulling $100 billion a month out of risk assets. I don't think they'll be able to pull $1 trillion off their balance sheet before they have to pause. Markets going much lower. Real quick reaction to that, Kathryn.
He's absolutely right. This is a double-barreled approach. This is unlike anything we've seen in the past. It's not just rates going up. Remember, in March, the Fed was still buying bonds. Now the Fed has to reverse that and go from not buying bonds to letting them roll off. And that's a big number. And that in and of itself, that double-barreled approach can take us into recession. I doubt they are able to do it.
Thank you. Mike, crypto crumbling this morning. $200 billion wiped off the entire crypto market just over the weekend. Bitcoin prices falling below 24,000, the lowest level since December of 2020. Meantime, crypto lending company Celsius Network is pausing withdrawals for its customers, the latest sign of a collapse in crypto. Mike, your reaction to all this?
Dagan, so the saying goes, like, when the tide goes out, you can actually see who's wearing a bathing suit and who isn't. And so I'm going to read you a tweet from Celsius Network from November of 2019. If you don't have free and unlimited access to your own funds, are they really your funds? Unbank yourself with Celsius. So I think that is the key driver of Bitcoin sell-off. And a lot of these crypto exchanges do not have the capital requirements. They don't have the custody requirements of a normal brokerage. And so in times of duress, you could see who's well capitalized and who isn't. And most recently, as of like the third week of May, they had $30 billion worth of deposits in crypto. So a lot of these, so what you're seeing now is a lot of these exchanges, are they well capitalized? Are they not well capitalized? What you saw with Luna is there's really no such thing as a stable coin unless you physically own US dollars $100 in your checking account. I actually think because of what's going on with Celsius, this move is going to get overdone. So if you're a long-term believer in Bitcoin or Ethereum, now is the kind of time where you really want to start legging in. I think this is this is overdone, this sell-off, based on an individual, a one-off thing that's happening that'll probably happen again with some other exchanges. And so for those people that don't know, when you stake a coin, it's the same thing as if you have a stock that's thinly traded in one of your brokerage accounts, and the brokerage firm calls and asks you, hey, can we loan this share out and pay you an interest rate? Well, a lot of people do that with their crypto to earn interest rates overnight, and some of these rates can be as high as 1,000% annually on certain rare, smaller coins, and it can be as high as 10 or 15% at some of the smaller exchanges for a Bitcoin. And so when people are paying you that much money to borrow your Bitcoin, how do you think they're generating that rate of return?
Right.
Well, they're obviously taking a large amount of risk, and you're seeing that play out right now by locking up deposits on their network. So this is a one-off event. If you're a long-term believer, I'd actually be a buyer here.
I have something to say about that, but I want to get to Rebecca, because if it sounds too good to be true in terms of what you're getting paid to loan out an asset, or just if it sounds too good to be true in life, it is too good to be true. It's not magic. Rebecca, gas prices hit a new all-time high today, $5.01 a gallon. That's the nationwide average. Diesel at a new all-time high yesterday, $5.77 a gallon. Oil, however, falling this morning. Beijing out with a COVID warning, but investors in oil seem to be worried about a deep recession. Your reaction?
Yeah, Dagan. I mean, summertime is where people are spending the most on oil because they're getting their family trips across the world, right? And at least in the United States, that's how our seasonal works. And obviously, we had some Norwegian concern about a strike over there. That seems to be working out and making August futures a little bit less than we were on Friday. But, Dagan, if the demand is not there, if people cannot afford to go to the store and pay what they're paying for bread, milk, and eggs, and then go and pay twice as much as they're used to paying for gas. I mean, we get an 8.6 CPI number, but people realize that that is not accurate. It doesn't reflect food and energy and how much less they have in their budget to spend. And so the demand is definitely going to be severely impacted in America at these prices.
Rebecca, great to see you this morning. You too, Kathryn Rooney Vera. Thank you so much, ladies, for being here. Michael Lee, you sit right there, because I got something to say about about crypto, what you just said. So you got to hang around for that. We have much more ahead coming up. The NYPD